Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today on the Econ Show, we're going to break it up into 5 segments. And the first segment is going to provide a geopolitical backdrop, just to provide an update for what's happening in Iraq, Syria, what's happening in Myanmar, but just because it's becoming a bigger issue, especially when we look at Myanmar and what does that mean going forward when you look at the stability of that specific region and how it could bleed into China. Then we're going to turn to grains and why pricing exploded again today in the U.S. just after the USDA came out with their new estimates. Why those estimates are the way they are, just because again grains there's going to remain a big shortfall, and we're going to talk about the drought side, where some of this inflation pressure is, and then how the logistics is getting impacted. Then we're going to flip over into the second segment, just going deeper into COVID-19 residual impacts. Now that we're on the other side of it, where are we with consumer spending, which is still elevated? Where are we on consumer savings, which is very much weighted towards the top 20%, with a lot of the others left behind? What does that mean going forward? And then how are PMIs adjusting when you look at prices paid, prices received, those supply chain issues, which, spoiler alert, prices paid remain very elevated, prices received continue to go higher, and supply chains still remain a problem. But it's then more than that. What's happening with jobs? Where is the jobs data falling in? Because we continue to see this wage compression issue in terms of where ADP is, where some of the others are. And then we're going to go into consumer spending and housing slowdown, and that's where we're going to go deeper into what is the spending patterns, how are they going to change, durable goods versus services, which is continuing to adjust, and then looking at housing and how is that being impacted based on obviously the underlying inflation. And then Europe keeps getting better, so we're going to go through what are some of the most recent surveys. Macron is slated to win in France on a runoff. These are things that are adjusting. How is France and really Germany and some of the other fringe nations starting to kind of come back. And then we're going to go deeper into China data. So S&P Global did a really good breakdown of the Chinese debt profile, and we've done a lot of work on that. That's not new, but what is going to come next now that we've had the PMIs are slowing again, consumers not spending, we're seeing additional pressures on an industrial side, exports, and then what is happening on the inflation component when we start taking in those input prices, because again, cost is set up, is where you come up with what are your prices going to be. And there's a lot of pressure on the export side. And then we're also going to touch on what's happening in India, what's happening in the rest of the ASEAN nations, and what do we expect going forward now that the dollar is strengthened a bit, coming close to our target of that 92.60. Not to say that we think it's going to go much higher, because it's this is kind of where we think it'll live. But again, these are our pressure points that we're going to want to address. So when we look at what are some of the recent things that have transpired. So in Iraq, the U.S. Air Force struck at 2 locations. Both of them are right on the border of Syria. So one of them is actually in Iraq, the other is right in Syria. And then it was a turnaround response from it. So when you look at what the impacts were, you had Iraq, the U.S. hitting some key locations that are Iranian or Shia backed. And this was on the back end of Israel doing their own airstrike within Syria. So you had it hit from both sides, the Israeli Air Force and then the U.S. Air Force, which is also coincides with where we sit with the Iranian U.S. deal. So if you remember last week, we talked about why the Iranian economy needed a deal. But if you've been listening to us, if you've read our stuff, you know that we don't think one happens. So here we sit where they need one, they're not going to get it, and the pressure on their economies is going to increase. And there's the reasons why they're not going to have one is now twofold. It was only one-sided. So the initial reason was the U.S. wants to keep pressure on their ballistic missiles. And then on the other side now, they have fallen out of the scope and with the nuclear watchdog out of the UN, which has now expired. They haven't re-upped. They've continued to breach that, which is going to become a bigger problem over that time period. And one of their nuclear facility, their only actual nuclear facility, was shut down, which again, these different attacks. And you continue to see where in Iran, there was a drone that lifted off in Iran and actually struck a local site. And all of this is a means of minimizing impact to the local populace while trying to impact the economy and trying to drive a certain amount of change. Now, we just wrote an opinion piece for Political Talks where we look a bit at Iran, Lebanon, and Sudan. So look out for that. We'll post that as soon as it's up and printed. Now, before we go into the next slide, looking at some of the impacts, we just wanted to talk about on what happened on June 8th. So the U.S. Senate passed the United States Innovation and Competition Act, or the USICA. And it features an increase in budgets for the National Science Foundation Department of Energy. And it's just investment. And the measures are to counter Chinese influence abroad. So this is another angle, because as I've been saying from the very beginning, whether it was President Trump or President Biden, we were still going to try to increase our influence in Asia, continue to make friends, and based on their wolf warrior status and how they've done things, which we'll talk about in segment 5, China has actually alienated a significant amount of people that were kind of friendly, and then this stance of wolf warrior has pushed people further into the U.S. camp, which is something that is going to become a much bigger issue. And then China's Minister of Foreign Affairs had this to say: how the U.S. develops itself in its own domestic affair is his own job, but however, we firmly oppose efforts to target and use China as a pretense. So these are some of those friction points that are going to remain. And this is also more important when you think about how Iran is getting money. They're getting money through China by signing a deal. Now, Iraq and China had signed a deal for crude that has since collapsed as crude prices have gotten better. Iraq has opted out of it. Now, this was one strike site. This is another key site. Now, these are these circles. You can see where the destruction was. You can see a planet, and then this symbol. This symbol is someone who is very active on Twitter. I highly recommend their following, and I'll give you that level of detail afterwards in the comment section, just so you can follow that this group. So then when we look at, what was the response? Well, as reported last night, damage sustained in the Green Village in Syria last night from Iran militants were shelling. So this is where the U.S. is actually stationed. So the U.S. responded after the initial shelling reportedly against the launch sites, and the image comes from, again, @Planet. So this is what happened after the site. So there was a warehouse that was hit, and there was a fire that actually broke out. There were no injuries reported, but then when we reversed and started shelling the launch site, there is one confirmed kill on one of the individuals who launched the attack on the U.S. Position. But again, these are things that we continue to see them Iran is trying to show strength. They're trying to push this forward. They're trying to highlight that, hey, we're still here. We're going to support you, but their economy's worsening. A hardliner was just elected back in. There was a lot of protests about that. There's a lot of pressure on Iran right now, and it's bleeding out into a lot of these regions, which is why we think that there's going to continue to be a lot of these underlying problems within that area altogether. Now, just shifting gears for a minute into Myanmar. So we want to look at the ethnic armed groups. And you can see at the bottom, that's the article that some of this data comes from. And he is very good. Sometimes he'll say things where you're like, oh, that's outlandish. And then 18 months later, it comes true. So this is just looking at Myanmar as a potential flashpoint for the area. And this is the breakdown of some of these ethnic armed groups that have arisen in these key locations, which some of them are more passive and some of them are actually very active. And that's where we want to look at who is passive, who is active, and why is China going to care, and how could this bleed into other regions within this problem set. So this is just one that I will keep going back to talk about. So when we look at just the general backdrop of how the ethnic groups are broken down. So when when there were the attacks, you can see on the green side, on the red, that was the Rohingya that were pushed out of there. This was the Muslim subsect within Myanmar. They were attacked by the Buddhists, the junta, and then it was actually supported for the most part, or at least the president at the time turned a blind eye to it. So that continued to push out into Bangladesh. Now we have something a little bit different. So there's a new escalation in the civil war, and it's becoming more and more a civil war with the Mandalay, which when you look at the Mandalay here, which is to the left of Shan, you can see the Mandalay People's Defense Force is a newly formed anti-junta militia in Mandalay. Now, the junta was what took over, so they kicked out the president. They officially took control. She was just a figurehead regardless, and they have officially taken control. Now, Mandalay is a problem because that is a key kickoff point for the Chinese-Myanmar economic corridor. So right now, China is trying to stay as neutral as possible because they don't want to anger either side, because they want to maintain a certain amount of, they don't want to catch the animosity of the locals. They are just trying to say, look, we support stability. You guys do your own thing. We're okay with the junta. We're okay with some of the atrocities they've done. But if you guys win, we're okay with you too. Just don't harm our infrastructure. And this is where right now with China and Russia have been very wishy-washy. They've voted down any UN action, not that the UN action would do anything, but Russia and China are very much for the junta, for staying out and just letting things play out as we continue to see atrocities played out on all sides. There's nobody who is not doing some sort of atrocity against the other, which is why this civil war could very well continue to ramp up. And Mandalay is Myanmar's second largest city. So again, it's not only just a key pivot point for China, but it is also a very populated, very important economic region for Myanmar. Now, just to understand some of the different counterpoints here. So when you look at what China has tried to do on the Belt and Road Initiative, you can see that there's two levels in which they try to get to the Bay of Bengal. One is straight through Burma, and then the other pivots up into Bangladesh and then down through that region. So there's two different ways that they try to get to and around the Strait of Malacca, but both of them go through Myanmar. And that's why there is a big concern now in terms of, okay, well, the Strait of Malacca is a key choke point. The U.S. practices closing it off twice a year. Japan is now coming up with a reason why they can openly support Taiwan and come to the defense of Taiwan under the new interpretation of the Constitution, which I believe was in 2013 or 2014. When they reinterpreted it to now be less defensive and a bit more offensive, if they view that move as a stepping stone. And because the U.S. is their military for the most part, we okayed that adjustment because it allows them to help us in a time of war. So this is just zooming in now on some of those important areas. So you can see where the economic corridors in Myanmar and how important they are for China into those regions, and Mandalay is a key component to it. Now, when you look at the Da Nang coming from Vietnam across, this is also going to become very important because Thailand, who has its own junta that is now in charge, is pushing back on those coming across because they're being displaced. Which is where, when you look at the Karen National Liberation Army, those individuals, those women and children are being pushed back into Thailand, and they're actually pushing to keep people back within Myanmar and away from that entity. And right now, when you look at the Karen National Liberation Army, or is a separatist group in Karen State in southern Myanmar along the border of Thailand, bombing has driven many Karenni across the border into Thailand, where they are not being welcomed by the Thai junta leader, which is where we continue to see additional problems. So again, there's multiple assets that are being conflicted right now, and it's already starting to bleed out into the surrounding region, more specifically Thailand. And so far, China has done a good job of not angering either side, but they're going to have to pick a pivot point at some area, because you can see the two locations that are pivotal out of Mandalay, and then how that goes into Bangladesh when you look at some of the different corridors. And then it obviously is becoming more important for Vietnam. But again, Vietnam has a better relationship. Thailand is the one where we could see this branch into something bigger on the border that could bleed into something of a bigger issue. Now, Myanmar's arms suppliers, this is why China and Russia are voting a lot of things down, because they sell most of the arms that go to the current junta in power. So again, this is where you continue to see some of these issues. Russia will sell to the highest bidder. They do not care what happens. They do not care how their equipment is used. They just have a relationship. They're going to fill that relationship, and it's nobody's business what they do. China has to be a bit more strategic, and they actually sell to two different locations. And that's where they've continued to be fairly waffling back and forth. So there's the current military in power, and the United Wa State Army, which is backed by China and has been silent on the coup, though it has traditionally distributed arms to other EAGs. So the UWSA has distributed to others on behalf of China. So you can see how this is just a powder keg waiting. Now, could it all get shut down? Sure. But it's very, very, very unlikely. It is more likely that this civil war is going to spread not only within the country, but also into the surrounding area. Now, this is also a big important spot for tin and other raw materials that are used in the production of everything from microchips on down to cars. So there's a economic impact, not just a human life impact, which is obviously the most important, but also an economic means, and just where this is going to go down, because we continue to see a problem with and a flashpoint that could take down a large part of Asia and really devolve into growing conflict. And the reason why that is more likely now is because of inflation, is because of weak economies caused by COVID and problems prior to COVID, which we're going to discuss next in terms of, well, where are some of those additional flashpoints? And when people can't eat, they're more likely to take action. So then when we go further, people around the world feel increasingly insecure about their future. Now, you can see at the top, these are not, for the most part, these are not emerging markets. So if you can consider the fact that developed markets feel this way, what does the emerging market feel like? What are they impacted with? What are their concerns going forward? Because if you're in France and 64% of the French are concerned about job security, well, what is your job security views in India or Thailand or Vietnam? Now, they're different. They're not the same. Like South Korea, 65%. These are some of those underlying problems that need to be looked at. Now, having a successful career, who's concerned about that? Having enough money to live well. There are things coming all the way through in terms of where some of those issues are, where some of those problems continue to hit. And in the U.S., have enough money to live well. 42% in the U.S. are concerned about their futures. Own your own home. You can see that is becoming a bigger issue, and it's only growing as inflation continues to ramp up, driving up the cost of real estate. And then having a comfortable life in retirement, over 50% in most places don't feel as though they'll have enough money to be comfortable in retirement. Now, if you feel that way, if you're struggling, these are things that are going to want to drive change. You're going to want to see adjustments. You're going to want to drive some of these things forward. But how is that impacting the emerging markets? We've had multiple shows looking at how that continues to get worse, and it's actually increasing over time when we look at food and food insecurity. So at the other side of the equation is the percentage of population aged over 65. So if you're over 65 and retiring, that means there has to be more people behind you in order to support, in order to try to, give as you retire. You're going to take Social Security, you're going to take other government benefits, you have to have a tax receipts to help cover some of these shortfalls. And you can see just how there's going to be a huge shift in population between 2015 and 2050. And there's very little that can be done to adjust that. We've seen the birth rates, which are negative in terms of just growth of population. Typically 2.1 children per woman is the ratio to keep things flat. In most areas, it's about 1.3 to 1.8, which again is showing a contractionary level, which is being played out when you look at all of these different locations, because we're not seeing that benefit in terms of that rebirth of, and this is workers, this is economic growth, this is just who's going to pay in for those tax receipts in order to support the aging populace. And where do we see some of the biggest issues? Japan, not surprising, Spain, France, Germany, so Europe, but more importantly, China. China is where we're seeing that big pivot, and that's why when we start talking in the next segment, we're going to look at, well, where is automation? Is automation going to become a bigger thing to try to soften some of these bigger blows that are going to hit some of these key economies? Now, also, what is the share of working age population projected to shrink over that coming period? So, working age population as a percent of population. So here you can see as we go forward, the general OECD, you can see that there's that steady dip heading towards that 50% number, which again is just showing just how stark those issues are. And they're only going to get worse unless we start to see some sort of real shift and change. Otherwise, this is going to become a much bigger problem over the coming years. Now, globally, interest rates have continued to climb following the FOMC decision. So we've seen some waffling back and forth. Rates have since fallen, over the last couple of last few days in the U.S., but they're starting to, essentially hold firm. But here's what the expectations are. So we've seen rate hikes priced in Bank of New England, Australia, Bank of England, European Central Bank, and Bank of Canada. You can see that liftoff is really starting at the end of this year or in 2022, with a lot of that pulled forward as we see a lot of slack. When we look at the repo in the U.S., we came in at $991 billion. I was expecting over $1 trillion, so I got very close to it. I was just $9 billion off. And it just means that we're at this point where liquidity doesn't do anything. QE's not doing anything. It's the banking system is completely saturated, and we're going to have to see a big shift, which is again starting to get priced into not just the U.S. but globally. But what does that do? That's going to make things tougher at the emerging market level. And here are some of those other problems where container rates continue to surge to all-time highs. And let's think about why. So that we had a lot of backlogs in the Yanshan port, which that has now since been relieved, but it's going to take weeks for that specific port to normalize. And China locked everything down because of COVID. There was stringent epidemic prevention measures that were put into place. This continued to hinder a lot of this full reopening, but it's also created and reverberated through the system, which has not gotten any better. It's only gotten worse. And this is something where, as we've said before, we don't think prices are going to continue to go up. We just don't think they're going to fall that much. And they're going to start to come down a bit, but we're seeing this stickiness because there's so many issues, and we're going to talk about the shortage in inventories have gotten worse, especially inventories to sale ratios, and the PMIs continue to demonstrate just how problematic the underbelly is of these different specific regions. And the retail mobility continues to move in a positive direction for North America, but is starting to roll over. And in North America, it's flatlining. So this is where when we look at the retail mobility side, and this is looking at retail and recreation, what is your propensity to consume? What is your propensity to go out and spend? You can see some of this starting to roll back over, driven by either concerns about Delta variant, lack of money. You've gotten your stimulus, you've gone and spent it. Now you're starting to see some of this normalize, and again, slowing some of that recovery that we continue to hear about within the global backdrop. But what are some of the other issues? Well, it's soaring prices. Look at the international food prices continuing to shift higher. Cereal index, food index, vegetable oil index, everything is pressuring up, and there's little to stop it because demand has grown, but supply has seen continued shortfalls, which came out again today with the United States quarterly grain stocks. So June 1st for corn was 4.11, trade average range was 4.144. Soy was came in at 767. The expectation was 787. Wheat, something similar. So you can see that there are just broad shortfalls. So March 1st, 2021 stocks, where June 1st, 2020 stocks are, there's continuous concern because everything was going great. Everyone's like, oh, well, there's rain and the weather's getting better in some of these key locations. But I keep talking about there's still an underlying problem because some places are getting too much and some aren't getting enough. And that's where we continue to see some of this fluctuation and these pressure points that continue to roll out and become that overarching problem as we go through the rest of this growing season. Then when we look at the USDA, corn in terms of millions of bushels, current was 4.112, survey was 4.13, soybeans 767 versus the average of 773. All wheat 844 versus 868.1. So you can see it's worse than the survey and much worse than a year ago. So again, we're not getting a bumper crop. We're not getting, and this is just, again, continuous problems within the U.S. Now, the U.S. will be fine in its own right. We have more than enough food for our country. So we export the excess. Well, if there's less excess, it just drives up prices. So again, this is becoming a bigger and bigger problem at the emerging market level as these prices continue to drive higher. Now, looking at it a little bit differently, figures in millions of acres. So how many acres have been planted? The survey for corn was 93.8, came in at 92.7. Beans was 89.1, came in at 87.6. Wheat fairly in line, about 0.7 better. Cotton about just right in line. But you can see the pressure where even though some of these are either in line or slightly, essentially in line or slightly above the prior estimates, we're still not seeing the same type of yield because of some of these shifting points that we've seen overall. So how are we seeing some of these shifting points? Well, let's look at manufacturing and QE, and then we'll go through and wrap up where some of these adjustments are for drought and water in terms of just why this is not getting any better. Because not only do we have the 10-year yield, which is completely not followed the PMI manufacturing, there's also other indications where if you look at QE, QE for Q2 outweighed Treasury issuance. So you had Treasury issuance coming lower, so QE was going out and buying excess, which again drove down rates. So you're going to start to see some of that reverse when you have that pressure removed, that are going to push rates higher again. You're also going to have the backdrop where you have that inflationary fear. Now you have corn prices, grain prices limit up after coming down. Now they're limit up again. You see freight rates being an issue. You see a lot of these input costs that are not getting any better. They're not getting much worse, but they're not getting better. And now we're going to start to see service inflation. We're going to start to see labor inflation. We're going to start to see that housing inflation, which has still not really worked its way into CPI yet. But when you look at low borrowing costs, it's happened over the last 20 years. For the last 20 years, borrowing cost has fallen, even though we've had these different increases of the global financial crisis and the Great Lockdown. Why? Well, there's three reasons. There's one, you had technology. Technology exploded, which is a deflationary measure. You had the U.S., which was exporting inflation because we were exporting the cost. We were going to the lowest cost producer. We were optimizing supply chains. And then on the third side, you had the Feds, the central banks, which have expanded their balance sheets. They have been net buyers of this over the last 20 years. So again, these things have helped drive this down. Our view is that this is now reversing. We're now at the end of that bond bull market. And again, nothing dies in a straight line, nothing goes up in a straight line, but we're starting to see those pushes, and it's showing up in the repo, the reverse repo rate. It's showing up in a lot of these problem areas now that we start talking about food and how that drove, the initial uprisings that happened in 2010 and 2011. But what didn't we have in 2010, 2011? A pandemic. What do we have now? A pandemic. Things that are going to make just all of this exponentially worse. So here's just looking at the central bank expansion in percentage of GDP as you go back to 2008 when you started to get that acceleration, and then things just go essentially parabolic in 2011 and beyond. So that's that last push when you think about the last 20 years of rates coming down. But why is it going to keep things lower? Why do we keep talking about food? Because when you look at just the droughts that we're experiencing within the U.S., just look at the water issues. Look at how the severe droughts that are being impacted essentially west of the Rockies. And you can see just the amount of pain that is being hit, and it's bleeding across the top, the northern side of the U.S., and in some parts of the Northeast. But again, there's some of that is just timing. The biggest issue is this is a bigger shift in terms of weather patterns, because weather patterns don't stay consistent. They adjust. The Earth is a living, breathing thing. We've had deserts go to lush rainforests and back. We've seen that happen countless times over the millions of years that the world has existed. And this really looks like we're facing another shift, which how is that going to change food? How is that going to change, electricity demand, the living problems or the living impacts to these underlying individuals and our farming, which again is shown here, which when you look at the percentage of crop area in each state, short or very short of topsoil moisture, you can see just how strenuous the West Coast is. There's a lot of citrus. There's a lot of nuts coming from this area. There's a lot of problems that are coming within this. And then if you look at Iowa, one of the largest growers of corn, a piece of the state is getting too much water and the other state isn't getting enough. So you're starting to see these droughts. I mean, look at how much water has come into some of these, actually flooding. So now there's too much moisture and there's other areas of not enough, again, creating these underlying shortfalls that continue to be a problem and just where is our yield going to be? How is this going to impact pricing? And these are, again, key strain points for emerging markets that have to go out there and buy food, buy grains, and you're seeing cereals, vegetables, fats, meats, all of this getting more expensive. And just given the underlying backdrop of the U.S., it's not getting any better. It's only going to make things worse, and it's going to keep prices very elevated for an extended period of time, mini boom cycle where we're going to continue to go back to the highs. And again, that stress was going to mount at the emerging market level.